Good turnaround Tuesday, everybody. I'm Dale Pinkert. How's everyone doing today? Hello, Luca, my trading warrior brothers, Saeed, Kevin, Ziggy. Who else is in the house? William Ford, Simon, how are you? Simon B, Scott, Roberto, Joe Kang, Forex Gal, how are you? Ethan, Dragon, Eddie, how's it going? I'm doing okay. Hi, Leon. Eric, how's it going, buddy? All right, first of all, before I get to my stuff, I really want to tip my hat to Blake. His pattern in play on the Euro Pound went to target at 90.61, so about 160 pips for subscribers that took the pattern in play short on Euro Pound. That was a great call by Blake. And, you know, that was just, you know, that was from a week and a half or so ago. And then yesterday during the session, he was showing the USD NOK down here. Steve said 785 was a key area. Knowing Blake, he probably booked it, got long. You could have gotten long during the session and done quite well. So, anyone take long USD NOK yesterday? Also, Friday on the gold, Blake called it up here, this candle. He wants to be humble, so he said it was the second candle, but either way, if you were long gold, that saved you a lot of money, and if you were looking to be bearish, that was a nice short. Looks like it's going to recover. I'm looking for a turnaround Tuesday here. So kudos to Blake Morrow. That's one of the reasons. That's one of the reasons I was happy to join ForexAnalytix, is to know what Blake was thinking all the time, and then all the bonuses of knowing what Nicola, who I respect, is doing, and Grega, who I interviewed on FX Street, was doing. And now that I know Steve Volge, I miss him when his analysis isn't around, and Stelios, some great, he called the turn in the dollar last Friday, a pullback in silver. So we'll get to a couple of my ideas, or at least observations. So on a turnaround Tuesday, I think actually the dollar could be a candidate here. 92 was serious support. So here's your, I believe, 4 hour. We got above 92. So even if the dollar isn't going to new lows, and I still think Grega's count calls for it, Nick's count calls for it, could at least get a scalp to retrace this pop that we've had. I mean, I'm not impressed with this reading here for divergence at 19. So we should get a better reading if we make a new low, marginal new low. Maybe it'll stay above 30 next time. So this could be turnaround Tuesday scalp, risking 50 pips, looking for 50, 60 on the downside. And something that we were constructive on that I think is just taking a little bit too much time to get going. And it's a pound Kiwi, so we called it a breakout over this blue line here. And it's starting to diverge here. There might be one more shot up, but I think there's a chance, especially with all this pound strength, that it's not making much more progress, because the Kiwi, I think, still has a lot of people stuck. So really diverging, glaring from this high. You know, this could be a 1, 2, 3 and a retest, or we could get one more push up for 1, 2, 3, but eventually I'm looking for the breakout to be negated. This would be your clean signal closing back under 180. And if that happens, I think there's a chance to retest the whole move. So this is something that you may want to consider. Never take any of our trades blindly, but something that's setting up here. So when it comes to the euro, as long as EG is going down, it's kind of hard for me to, you know, fade it and buy the euro, but I can't get short here. Was talking to a buddy of mine here and said, you know, the most I'd look for on this wave would be the close from 2 weeks ago was 118.61. My bias, and like I said yesterday, sometimes I wait for one more jiggle. We had 2, Although, you know, if you looked at the daily, it looked more like a 3, just like the Dixie did, you know, 1, 2, 3. I still think there's a chance. I'm going to try and be patient that, you know, maybe we get a turn and we get one more shot up to the 50% retrace level at 2150. But if they're going to turn it, they need to start turning it here, turning it soon. S&Ps are at new highs. That's why I said avoid the yen crosses, because they were going to perform while risk was on. Talked about shorting the bonds. They've had a couple of bad days. So those are my thoughts coming into today. Canada looks like it wants to come out of here for at least a little bear market rally, but I'm not impressed. Someone sent me a chart saying this was about 78.6 back, and I'm not impressed because of this. You know, we don't have any divergence at the low. So could it rally? Yes, but no reason for me to want to be long, except for maybe just, you know, day trade or an hour trade or something like that. So turnaround Tuesday candidates for me are the short side of Dixie and a short side of pound Kiwi. Everyone with me on the...
I was just going to say that's a tough trade, being long the dollar CAD. I mean, down here, it really is.
Well, here, I'll show you. Someone sent me, this is what they're looking at. You know, I get some decent looks from people in my stream, so.
Oh, hell yeah. You know, I just want to say, you know, for me doing the morning edge and listening here, one of the benefits that I always found is when you have really sharp listeners, as we do, they provide good eyes and ears for the market. So I mean, I would honestly admit more than a half of my trades that I personally do came from listeners, because listeners are like, hey, take a look at this. And I'm like, man, I didn't even see that. And so that's the benefit of having the face community, is having, you know, all these great views of all these different traders. And so anyway, yeah, that's why I really encourage people to send, you know, and especially the easiest way for me was always asking, hey, tweet me a chart, because everybody knows your Twitter handle. And if they don't, it's Forex Stop Hunter. But if, you know, everybody, you know, tweet me a chart, and then I would just grab that chart and drag it over to the screen and say, hey, you know, Steve just, you know, tweeted me this chart of the euro. Let's take
like Luca just put one up. I like Luca's charts. I mean, you know, that's the way I ran LAR for years. Is, you know, go ahead.
Look, no, I was going to say Luke is not so sharp, but you know, other people. I'm joking. Luke has been a long time listener of our webinar. I'm totally joking. He knows I'm joking. No, but really, that's awesome. I'm going to let you continue. I didn't want to interrupt. I just wanted to say that's the benefit of having.
You know, you've been in the zone, bro, and you know,
Wait,
you know.
No, I haven't. No, I haven't.
All right. Well, you know, things that I know you're.
Last week I got smoked trying to be along the dollar. It was really tough. I'm just making back what I lost last week. I'm good.
Okay. But great note trade yesterday. Will you at least accept a compliment for that?
I will. I'll take that and the Swedish krona that was long. Yes.
All right. So these are some of the things. In fact, since we're talking about what the community can bring to us, let's see what Luca has. He's talking about EG possibly reversing, and let's see. And he's talking pound Swiss, which is something I rarely trade. But let's just see what he has here on EG. It's due. You would think it's due
for euro pound.
Yeah, for a pop.
You know,
it's ugly.
We were thinking earlier that maybe that's the pound Swiss, but that's the inverse. So he's talking that the pound Swiss may stall up here, which would in essence tell you that the euro pound may peak.
Okay.
Since it's the inverse correlation. I see. But at the same time, Yeah. It's just like looking at the dollar Swiss and the euro
Oh,
US dollar.
okay. All right. So, and you guys have, while Blake's getting ready, any other charts you want to share? How do you trade in your other room? Enter, exist, intraday. It goes 24 hours pretty much, Robert.
I'll put everybody on Jumbotron this morning.
Yeah, and you inspire Leon by talking about your losses. It is unusual. I mean, you go into 99 trading rooms and you're not going to hear your moderators talk about hits they take.
Oh no, I mean, and that's, here. Let me. Do you mind if I take over? Is it okay?
No, I don't at all. Hi, Jess.
Okay.
Go
So
ahead, buddy.
here I'm going over here. Let me just take.
Dollar's
Okay.
coming off a little.
Okay, so yeah, the dollar yen's coming off because gold just bounced. So if you guys use ForexAnalytix, you can see it's not a majority of my trades because so a lot of my trades are scalps, and just because I trade actively. But you can see, and I'm just gonna point this out here, right here. I tried to get long the dollar Canadian last week. I tried to short the Kiwi dollar, and both of those trades were invalidated. And I took these trades. All right. And fortunately, my euro pound, I was very aggressive. And everybody's like, in the chat room this morning, it's like, hey Blake, good job on the euro pound. And fortunately for me, like I said, I was very aggressive. And one of the things, if you guys want to know a little hint about what I do, if I blog about it, I'm probably getting pretty aggressive with the trade. And I blogged about the euro pound this weekend. If you guys didn't see it, let me get rid of this. If you didn't see the blog, then this is free. There's the euro pound risk of a long-term reversal. This I blogged about this, and usually when I blog about something, that means I'm pretty dead set on whatever it is, because
you're putting your credibility on the line, and you don't do that with junk.
Well, I do it all the time, but when I blog about it, it's usually a very, very well thought out process. That means there's a lot of conviction. Yeah, high conviction. Right. That's the way I look at it. And so my euro pound trade, I was aggressively short, and I did really well. I closed out half of my position overnight, and a lot higher too. I closed it out, near this trend line, but I still have half of my position because I am looking for the mid 80 pence level. So, and you could have read it in the blog. I'm looking for moves down here. And I wouldn't be surprised if we see the 200-day moving average down at 87 pence. It's not going to go there today. And I sure as hell hope that we get a bounce today or tomorrow, back above 90, because I'm going to sell some more. But I'm telling you guys that I'm aggressive, or I was aggressively short the euro pound, which is great because it made up a lot of my losses that I took last week. And I've been scalping. I've been scalping the U.S. dollar Swedish krona to the long side. I've been scalping the U.S. dollar Norwegian krona to the long side, and I send out all that intraday technical analysis. I mean, I may not put in a pattern in play because that it's not like there's not like a defining reason other than momentum that I'm buying or selling. But you could see here, like when I send out analysis, and it's not just me, it's Steve sends out analysis too. I'm like, here we go, approaching this resistance. Well, as we're approaching that resistance, I was already getting long through there, and I knew we were up against resistance, and I wanted to make sure anybody who was long like me is noticing that, hey, we're right up there. So there's a lot of things that I do.
So what you're saying is it's not just patterns in play, because you could use the analysis, even if it's not a pip, to guide you in the markets. Maybe the qualifier would be, what I've noticed is that for it to be a pattern in play for you, Blake, you have to believe that the move has duration for more than a day or so. Am I correct in reading into that?
Yeah. That's
More of a longer term swing trade.
that
And then
is a
some of these ideas, you could be in and out of it the same day, so you don't make it a pit.
that's exactly right. I mean, it's hard enough for me to try to trade and do analysis, and and then to do intraday, patterns in play are tough. But where I talk about a lot of my intraday stuff right here. And this is the chat room that is going to be available to you guys this next week. And we're just wrapping up all the technical specs to make sure that everybody can be entitled, that is entitled for this room. So guys, if you're listening in right now, you are on Jumbotron. There's Chi right there. There's Jack. So,
There's Bill Murray.
yeah. And there's, Joe, Leon. Leon says sandwiches are great. This is, and in this chat, you can see there's only 16 of us in there right now, but it gets up to about 30 because this is a private room. It's a private room, and there are guys and gals that chat at night, while I'm fast asleep, and you can see these guys are all listening in. And Chi, we don't understand your Chinese. I mean, I'm half Chinese. I don't understand that. Anyway, these guys, they like to harass everybody. But this is where I talk about all my intraday stuff. It's like, hey, I told them earlier this morning, like, here, you can read this. So what are we doing today? Long Aussie New Zealand, and I bought the Aussie New Zealand as it was dipping down towards the 109 or 109.85 level. Let's see. I closed out half the euro pound overnight. We'll take 82 on the other half we were just talking about. I'm selling some at 90.40 if I can get it. So you can see I'm talking about what I'm. This is this morning. Just when I talk about intraday stuff, it's all in this chat. Because when you put something in a pattern in play here, you have to realize that a lot of traders that we have are not capable of being in a chat room all day, talking about, because they got other lives, talking about, scalping this and scalping that. If I tried putting that in patterns in play, I have people spinning around in circles, not knowing what's going on. So, yeah, patterns in play.
Yes, so on patterns in play, here I am interrupting you, but on patterns in play, they're more of a slow developing type trade, so that if someone's at work or they even miss the first day you post it, they usually still have time to initiate the position.
Yeah, and it's educational because when we put in a pattern in play, you could go to the chart and go, okay, oh, here's a chart and it's an uptrend line, and it's buying off this pivot here off the uptrend line, and then explain it. We can explain it in the analysis, and you can go, okay, well, I'm buying down here and I'm risking here and I'm looking for here, and so it's much more longer term thought process. When you're scalping, it's like, half the time I'm like, hey, I just shorted the euro pound for 10 pips. I'm getting out, going to take some profits, stuff like that. And if you guys are active traders, I think you guys are going to really enjoy that chat room. And that's why, just so you guys all know, I got to think about everything that we talked about. This chat room will be available to you guys that have semi-annual and annual subscriptions, or you've been month-to-month subscribers for ForexAnalytix for more than 6 months. Reason why we do that is we are, I'd like to admit, we're very much of a family in here, and we chat a lot, and we talk, and we're all very friendly with one another, and we're very respectful of one another, and we want to make sure that that continues. So if you're serious about trading and you're, if you have a semi-annual or annual subscription, that tells us that you're really serious about what you're doing, or you've been, month to month, for 6 months or more. You're not fly by night, trying to trade. You're really in there, and hopefully, you know, having conversations with everybody. And like I said, everybody's very respectful of each other in there. You know, we will talk about what we're doing, and you know, sometimes I'll look at a trade and say, you know, I don't know if I would be buying here, and here's the reason why. And you know, and then when market's slow, we joke around a lot, which is fun, you know, and it's fun, and we just try to keep politics and religion out of this chat room, which you know, because no one wins in those conversations, and that's it, you know, and that's it. So and I hope you guys enjoy it. I think it's going to be a lot of fun for you guys. Okay, now I should actually talk a little bit about what I'm doing today. So I did buy some Aussie New Zealand. New Zealand polls came out, and the Labor Party is slipping a little bit, and so the Kiwi strengthened. But one of the things that you might see here is we just came down to trendline support, and actually we came to triangle support. This is a big, now you have to realize this is a multi-year trend line here. So if you go back to 2011, there's all these peaks here. We just came back and retested that today. So I wanted to be a buyer down here for the last, I'm not going to exaggerate, literally the last 2 weeks. I've been trying to buy around the 110 level. So now that we're here, it's like, okay, I'm starting to pick up some. And so I'm trying to get long, and I've got some already, and I'll be more than happy to add to it. The euro pound, I am still short a clip of the euro pound. It's been a really good trade for me because the euro pound is one of those currency pairs that it moves. The pip values are like 1.5. You know. Instead of 1 to 1, it's like 1.5 to 1. So that means that you make a lot more money when you're making money, and you can lose a lot more money when you're in a losing position. So you got to always be a little careful when doing that. So anyway, that is something that I'm doing right now with the euro pound, and I'm still going to get short more if we get some sort of bounce. Now the cable, you got to be a little careful with the cable here. The cable's trying to break higher, but I'm going to warn you guys that here's the pound dollar. Okay, we have channel resistance coming up. Now this is it's important to realize this, because every time over the last year the pound looks like it's breaking out, yeah, it stalls, and it's because we had this little minor channel here. I'm just dragging everything over, yeah. And so as it looks really bullish and everybody's like, oh my god, we're breaking out, you know, it gets squashed. So you have to be really careful with the pound dollar up here. Now I have to admit that the inflation data was nice and strong. Last week's data wasn't so bad. You know, it's and the pound could, maybe this is where we start really blasting higher. But I think if you're long the pound dollar, not necessarily the pound on crosses, but the pound dollar, you have to be a little aware of this, because what could happen is the pound, you know, maybe goes up another 50 pips and rejects. That doesn't mean the euro dollar can't go down to 117, but if the pound dollar goes to, you know, 133 and change, and then comes back down to 132, the euro dollar drops to 118, the euro pound is still going down. It's just, you know, the pound dollar may struggle. So that means you have to watch the dollar index while you're trading the pound. That you got to be a little bit more careful. I still like these Nordic currencies, even though I'm not long the US dollar Norwegian krona right now. I'm not long the US dollar Swedish krona. I like them. I think they've got some potential back to the upside, even though I have not bought them yet. And one other thing that I'm really looking to do is I'm looking to buy. I'm looking to buy gold. I'm looking to buy gold on a dip towards 1300. I don't know if we're going to actually hit 1300. I'm looking more at this trend line here. But what I'd like to do and what I've wanted to do is I wanted to be long gold on a dip, and my fear is that gold doesn't make it all the way down there, and that my fear is gold stops ahead of my buy order, which could happen. I mean, it's entirely possible. So I'm looking at gold as a possible long. I need another 20 points of a dip here before I start really considering it. But it's possible we get down there today, especially stocks are strong. Now it is Tuesday. We had Mutual Fund Monday yesterday. We have S&P at new all-time highs. We have an new Apple release today. Okay.
That's a big deal.
It is a big deal, and the reason why it's a big deal is if you look at, well, I haven't done the research, so I can't tell you with certainty. But from my recollection, when Apple releases a new product, and especially in recent years, the market or the stock market is not necessarily impressed.
Sells it. Yeah.
So yeah, you get the buy the rumor, sell the news is what I'm trying to tell you. And so if Apple releases their new iPhone 10 today, which everybody thinks is going to be the iPhone 10, which the market's been putting a lot of money behind Apple because they believe that this is a cycle, like for example, I have the iPhone 6, okay? So I have not the 7, I have 2 generations ago. I'm due for a new phone. I need a new phone. My battery is starting to get kind of wobbly, where I have to charge it a little bit more. I need an upgrade. I bought it when the iPhone 6 came out and I got the bigger screen. I've been waiting for that. I went from, and I jump every two releases. So I went from the iPhone 4, I skipped the 5, I got the 6, I had the 3 and 2. I think I had them all before that. But anyway, I went from 4 to 6, and now I'm going to go to whatever the new one is here. I'm buying a new phone. Me personally, I'll be buying one this next 2 or 3 weeks from now. But they expect this to be a big cycle buying spree for people like myself that are in the same boat. But if
they're going to be over $1,000, like.
I know they're going to be $1,000. I understand that. That's why I'm gonna take a 20-year lease on it. So just kidding, joking. No, I know they're going to be really expensive, but they expect that this is going to be a big cycle buy for Apple. Now, the reason why I say all this is because the market's been rallying. Apple's at at basically all-time highs here. And if Apple gets the buy the rumor, sell the news, it will have an impact on the overall market. So the reason why I'm telling you all this is because if we do get the buy the rumor, sell the news, Apple does come under some pressure. It could pull back the stock market. If it pulls back the stock market, maybe gold doesn't pull back so much. And so those are things that I'm thinking about today. I'm not trading Apple. I'm not trading the stock. I'm more concerned with what happens with the S&P, because the S&P is at these all-time highs. You can see here's the S&P at all-time highs. But if we turn away today and we start heading lower, like if we close on our lows today, that means we might have a double top in the S&P. And if we have a double top in the S&P, maybe gold doesn't pull back anymore. Maybe gold is a buy from here, and maybe the dollar yen does pull back from 110. So those are things that I'm thinking about today, because I'm thinking about, well, how does that, how's that going to affect the currency market? Like for example, I was looking to sell the dollar yen at 110. The reason why I was looking to sell the dollar yen at 110, and yes, that rhymes, I understand that. There's a 78% retracement here. You can see it here.
Yeah.
Okay. 78% retracement. There's also 127% extension right here. So we have that fib confluence right here. And I had a sell order at 109.98, or I think is this word, 109.98 and 0.6 of a pip actually. So we went as high as today. We went as high as 109.89 and 0.1 of a pip. So I didn't get my order filled by 7 pips or so, and because I was looking for a move right to here to short it, but that didn't happen. It didn't. I was just kind of waiting for this, and we might get that reversal early. I mean, maybe we start reversing right now, and I end up missing the trade, which is fine. I mean, I don't catch everything, and I never plan to catch everything, and you know, some things I get a little frustrated when I miss them by a few pips like this one, but I am looking to sell the US dollar Japanese yen if we get close to 110 today. I just don't know if that's going to happen. I mean, like I said, if people are unimpressed with the Apple release and Apple stock starts to come off midday, we may never get much higher in the S&P, and perhaps the dollar yen ends up selling off. So, you know, again, these are just things that I'm doing today and things that I'm thinking about. I hope some of you got short the euro pound over the last couple of days. You know, blogged about it over the weekend. It's been a hell of a mover, and I hope you guys have been making money overall. So, hopefully Steve is here. Steve, are you here this morning?
Hey, man.
I am.
Yes, I am.
I'm here, Stelios and Steve. How you guys doing today?
Hey guys.
Yes, Dale?
Hi, Steve.
Hey, hi. Sorry, I didn't hear you well.
I actually had one thing to mention before Steve takes over, if that's okay.
Yeah, you better hurry.
Wait. So Stelios is, and by the way, he's got a long-term. You want to talk about long-term trade on the euro pound? He's looking for, well, you probably want to talk about it, Stel, but you're looking for a lot lower in the euro pound.
Yeah. So I mean, I've discussed this when I put it on. What was it, a couple of weeks ago? I can't remember. But I have a long-term bearish view on this. I have two targets because I have the trade on personally. First one is around 0.87, and the next one is really down around 0.82. Various reasons for this, but I just wanted to say that short term, we have tomorrow average earnings index plus bonus, which is supremely important. Yes, jobs data, yeah, unemployment, not as important. I think it's, you know, it's almost full employment in the UK at the moment. But from my point of view, the earnings index tomorrow is hugely important, because in terms of hard data, anybody you ask who is bearish the pound, why, you know, if you ask them why you bearish the pound, 9 out of 10 will say to you that inflation is growing at a much higher rate than earnings. And that has been the case. Now, inflation is going up. If earnings continue going up as well, we're expecting 2.3% year on year tomorrow. If it comes, I think, at that level or any higher, that's it. I think the pound is going to get is going to go much higher, and I really personally think November inflation report, we're really going to get to pricing a hike then. I know it doesn't make much sense for a lot of people, but I think reversing, I've said this many times, reversing the August cut after the referendum is something they want to do, and they have said that some MPC members have said explicitly they will not tolerate high inflation for a long time. Obviously, short term they will. Sorry?
That is their mandate anyhow. I mean, that is their only mandate, isn't it? So they can't ignore it.
Absolutely. And I personally think that if earnings pick up the pace just like inflation has, I think we're going to be done. When? I don't know, but I really think the market is going to start pricing in November hike. And at the moment, it's pricing very little. I think like a couple of basis points. I don't actually have the Sonia MPC prices, which tell you exactly what they are, but I don't think this is pricing much for November at the moment. Just, you know, just my 2 cents, and I am sticking with this trade. I'm long sterling against euro, and I'm also long sterling against the Kiwi, and I'm really sticking with those.
Worth more than 2 cents, Stelios. And you know what, your fundamental analysis is really top shelf. You know, I mean, you really have a handle on it. Really good.
I try to do the best I can. You know, I'm not there to judge.
I look at mines, you know.
Hey, Steve.
You give me a reason for why my lines go where they go. So.
Hey, Stelios, good outlook on the euro pound. I just passed the screen over to Steve. I'm going to get ready for my trading day. You guys, good luck today. All right.
Enjoy, Blake. You do, mate. You do.
Thanks, Blake. Thank you, buddy.
Thanks, man.
Hey, guys.
Hey, Steve. Thank you, Del. Hey, Steve, if you don't mind, with what the S&Ps are doing, and me being an amateur elitician, I'm wondering if this is possibly coming out of a wave 4 triangle for a terminal thrust to the upside.
Why don't we let Grega that is here give us?
Oh, okay.
Yeah, he's here. So
All right.
why don't we give him Grega? I'm going to pass the screen to you, mate, if you're ready. So
Yeah.
we can you can have a
Grega's
look.
got a nice DAX trade working, so you know the DAX is not even close to new highs compared to the the U.S. markets are making the new highs. So
you remember, Dale, that we were looking at that descending channel on the DAX.
yeah,
And I had explicitly said that I like that trade very much, and I prefer it over the US stocks. I don't know if I'm going to end up being right on preferring it over the US stocks, but fundamentally, I don't want to be long US stocks. I think that we're very likely, to find the top very, very soon.
yeah, and kind of the public banter out there is Europe's economy is stronger. People have been talking about Europe outperforming the U.S. And then here we are today at new record highs in the S&Ps, and the DAX is what?
Yeah,
a couple hundred points off the high.
I with pleasure would leave the the buying of US stock. Yeah, mate.
We can stream
the one that currently has a browser that says connected to GoToWebinar.
Okay. How can I change my screen?
There is in the panel of the GoToWebinar at the sharing button, there is a show screen button. It looks like a play button on a video. That below it lets you choose the screen. Yeah.
Okay, perfect. So you see now the S&P 500, right?
Yeah.
Yeah.
Now you see why we're buying. So from what I see here, you're looking for a high quite close to this level, right, Grega?
Yes, actually, we can be in final stages here, wave 5. But the fact is that still I don't see 5 subways within wave 5. So if we go to smaller time frame, maybe 4 hour, then we can assume that maybe this is maybe even ongoing wave 3. Okay, so wave 1, 2, and as you can see, we could then continue much higher with 5 waves within wave 5. So definitely I would stay bullish here, but I am aware of potential reversal to occur much earlier because we have this open gap here, and I also see DAX trading into some resistance. So definitely I would expect at least a correction, if not a deeper pullback from near-term levels. Also, if we take a look on DAX, here I think that we are in final stages of wave 3. So also I'm looking for a pullback down into wave 4 and then continue higher into wave 5. Now I think that there is much better shape or looking wave structure on DAX compared to stocks. So even if maybe S&P 500 will make an extension to the upside, I think that that these German markets are looking much better from technical perspective.
You see, we agree once again with Grega.
Yes.
So Greg, even though it's lagging, it still looks better.
Yes, it's lagging, but it's not lagging much for the last 2 weeks. It was lagging before, but now it's catching up a bit quite strongly. So I think that there are maybe some opportunities on some single European stocks as well. So I would stay bullish. General still risk on trade. So maybe some opportunities on yen crosses, on dollar yen. There's potential bullish reversal in play here, but I really don't like trades against those gaps. So those gaps are still widely open. I don't know when will they get filled. But maybe after 5 waves up are completed. So for now, there's still room for slightly more upside here on dollar yen. From a bigger perspective, clearly this was a corrective decline from end of 2016, and sooner or later market is ready to turn. I just really don't see a chance to count this as a bearish impulse. So what I see is that this dollar yen is actually some kind of a confirmation for me that sooner or later dollar will turn to the upside. Okay, and maybe euro dollar, if we take a look on this one, today it broke into the downside. I was looking for potential ending diagonal here, still not out of the woods, but there is a chance that sooner or later top will be formed. And the reason why, maybe if I level this real quick, here's an alternate scenario. So if you see my charts, ALT, this means that this is an alternate case for this top here. And I would not be surprised to see this happening, because on candlestick formation, let me just search it for euro dollar. On candlestick formation, it looks like an evening star here.
Evening star formation, yes. Yes, that's what we said yesterday.
Right now, earlier today, we have seen a spike, slight spike on the intraday charts beneath yesterday's low. Then we have seen push higher, and I said to myself, if we get another decline to a new low, then this could be a really nice bearish leg in progress for the day. So I would not be surprised.
So it's got to hold in here. Greg, it's got to hold in here for the ending diagonal to happen. Otherwise, that count is off the table for one more high.
Actually, this ending diagonal is just a question if we will see another high and then a sell-off, or a high, or is already weakness coming from current levels.
Yeah. Okay.
So, but if we focus or maybe look more robust at the charts, then I think that this is a top formation coming game. But as you know, their tops are taking long time. They are taking long processes. So I would not be surprised actually if we see something not so clear here in the coming days. But definitely, I think that there is coming a reversal to dollar strength in the near future. Here on the daily chart, I'm still thinking that we are in some kind of final stages of a wave C, of a flat correction. We also have a nice divergence here, but this candlestick formation is probably the most powerful tool at the moment, which suggests that
Greg, the DXY, and that's unsurprisingly, of course, has a descending wedge and also produced a morning star formation yesterday. So it's yes. You know, at a big exactly. Yes, exactly. That's what I'm looking for.
But of course, I'm looking for the similar shape here. As you can see, even if we consider the ending diagonal, there's still a chance and still valid formation.
Yeah.
Okay,
that's why I agree with you. That's why I'm also looking for confirmation. I'm looking initially a break above a daily close above 92.20, and even better a daily close above 93 to confirm that.
Yes, exactly.
You know
that 93,
yes, to actually confirm that was, you know, a bottoming formation.
Yes. So for now,
hey, Greg, the bonds have had a couple of negative days. Have we finally completed 4 to the upside, and now we're going to wash to new lows? Is it starting to look that way? Because that's how you could get a 115 euro, isn't it? Eventually.
10-year US bonds. So,
the bonds.
Yeah. Good.
Yeah, the bonds. You know, that's part of your fundamental theory. Yields go up, dollar go.
Yes. I'm just looking.
Both the bonds and the treasuries today, Dale, we're going to see them together as well from a basic technical perspective, are testing very key levels. Both of them, actually.
Oh, they're up again. Yeah, okay, but we're close.
Here are 10-year US notes. I was expecting, and as you know, I was looking for potential continuation lower back in July. Obviously, this occurred to be only just another sharp pullback with an uptrend. But the important is that with this recent move to the new high and another fake breakout and reversal that we can see right now is just confirmation that it is a corrective wave, and that sooner or later downtrend may resume with much sharper sell-off. On the 4-hour chart, actually I labeled this whole rally as a correction in 7 legs. So it's actually a double zigzag, ABC, X, and another ABC. Here was an expanding diagonal in wave C, and now as you can see we have some kind of an impulsive reaction to the downside. And
Greg, from a basic, that's what I want to say. From a basic technical analysis, you can draw that as a channel exactly. That's what I have, and we're currently peaking below it. Yes, that's exactly what I see.
So I think that we could see some downside pressure here, which means yields could rise much further, and as you know, dollar yen could then stay supported, and dollar in general as well. And even this could be positive, as you know, for stocks. So maybe we will see some extensions higher on US indices as well, in line with German DAX, which is already acting very powerful.
Have you checked copper, by the way, lately?
No, I hadn't. I know that it is falling.
Actually, it's also testing like an ascending channel support. We indicated last week, that it might be very close to a turn, and it seems to be turning. And I think it's about actually to break key support, and which should lead to at least a deeper correction, with whatever implications that might have for Aussie, as you said. But for me, it still looks impulsive in the longer term. Copper, I mean, we had an impulsive move, a correction move, and an impulsive move once again. I don't know if you want to have a look at it, because I know a lot of people are interested for it as well, since it's also acting frequently as a barometer for plenty of things, commodities, risk, highly correlated with several.
Okay, here's a continuation chart. Okay, so it's not a contract. But still, if I just label it real quick, looks like it was
it's one of these rare occasions that it bottomed with a triangle, because that 1-2 that you labeled there, and then the 1-2 of the second of the extended third wave, as you see, they formed like a big triangle bottom.
Yes, exactly. But still, the first leg, as you can see here, was made by 5 waves.
Yes, I totally agree with you. It was a 5-wave uptrend. Yes.
So, but I agree, it would be very hard to trade it on the upside unless you waited on a break above 32. But the key is here that, as you mentioned, that we may face a reversal. I just looked in the intraday chart, and it looks like there is a 5 waves of decline.
So we're expecting for a correction and at least one more leg lower.
Exactly.
Yeah.
So waiting on an ABC and then a new decline.
Yes.
So
exactly.
Technically, I would be looking for a drop back to those levels. We had some noise here, and it appears that this was probably former wave 4. So definitely I would be looking for a drawback.
That's exactly the target I had given, that I'm looking for 2.8, 2.85, 2.87. That's where I'm looking for some kind of support.
Yes.
And I guess that's where we're going to find out if this is simply a corrective move lower, which the chances say that it will be, since the trend has been clearly on the upside, or it's going to be something more than that. On the other hand, of course, we might get something a lot more choppy, as you very well know, like a zigzag, double zigzag, or whatever the hell this might evolve being.
Yes, but just to be a little bit more simple, what is really important is that we should see a deeper 3 waves decline, because it looks like that we have 5 waves up. So I would not be surprised if into the year end copper prices will be much lower. Also, as you know, this is holding positive correlation with Aussie. So on Aussie dollar, is not a surprise to see also some kind of a bearish structure. We have 3 waves up. More importantly, we have 5 waves up here from since May, actually. Okay, and here from this recent wave 4, where I labeled it as a triangle, we can see some nice reversal. So we are falling back into the triangle zone. If we can get below this termination point of a wave 4 at 79.40, then this will be indication that top has been put in place here and that we are going much lower with minimum 3 waves, of course, but ideally in 5-wave fashion. So as long as copper remains under pressure, I think that ASI could come much lower as well. Also
we have
here on the chart, there's actually a nice clean 5 waves of decline. And you can see I draw a potential wavy pullback earlier today, and I will watch out for another push higher, wave C. There's a resistance at 80.57 up to 80.75, so that would be my zone for where I would be expecting a drop in either into wave 3 or maybe just a wave C.
Grega, there is a friend asking your point of view on the loonie, if you're done with the Aussie USD.
Okay.
A lot of people, as you understand, have been trying to bottom pick this one, and this relentless move to the downside has taking its toll on a lot of trading accounts.
Yes, and actually I still think that this is downtrend in progress, that we will see continuation to much lower levels, but sooner or later we may see this bounce in wave 4. I'm not sure if this wave 3 has already bottomed. Maybe another retest of these peak support levels could occur by the end of the week, and the reason is because here in this red wave 5, as you know, we also need 5 subwaves, and if we take a look on the 4-hour chart, that's not the case yet from these mid-September highs. So I'm looking for wave 1, 2, extended wave 3. It looks like that we can be now in a wave 4, making a 3-wave rally back to resistance of a former wave 4 here at 22.40 up to 38.2% at 22.85, and there's also this trend line resistance, which I already talked and explained how they work in our past webinars. So in a strong downtrend, when you expect to be wave 3, you want to see this lower trend line of this parallel channel to be broken, because normally this
because you want acceleration.
Yes, exactly. In the opposite, in the corrections, you would expect that wave C will stop here and then market continue higher. But since this got an extended structure, it confirms the fact that this is wave 3. And what really matters is that in a pullback, this same trend line can act as a resistance. So everything comes in here at, as I said, at 22.40 up to, let's say, to 23. From that zone, I would be looking for another potential sell-off into wave 5 to complete wave 5. But trading within this current downtrend can be quite dangerous, because what I think is that we are in a final stages of a current wave 5, and that sooner or later we will see another correction up into wave 4, and then again continuation lower. There's definitely no reason to fight the trend. Always trying to level the chart so to stay with the trend, and this one suggests more weakness.
Yeah, that's exactly what I have been saying for a long time in the USD CAD and USD NOK, and we were actually very lucky because we managed to cut some USD NOK shorts, because I don't know if you had noticed, Grega, but on the way down, the USD CAD was leading the USD NOK actually, so it was a very well, ahead indicator for what was coming up in the USD NOK. So, people that didn't catch the initial train of the USD CAD at least had an opportunity with the USD NOK.
Yes,
we're getting some questions on cable for you, Grega.
Yes, and that's a good question, actually. I wanted to tell you, there is a friend here, because, this is a good thing you can explain to them. He's saying, Robert is saying, Grega, pound USD has made a new high. It's not corrective now, so it's a new 5-leg up, he's asking. So, this is the place that you will explain to them that, yes, it is a 5-wave move higher, but it's part of a bigger corrective move from what you're looking at, correct, Grega?
Yes, actually back in mid of summer, I was looking at 2 resistance levels. First resistance level was for wave C, was this equality level. So I took distance of a wave A, compared it from a wave B low, and I came out with the resistance at 1.33. So actually we hit this zone and reversed to the downside. So I firstly thought that this is a high in place here, but obviously that's not the case. We are back above that levels. So it looks like that we are now facing and going towards resistance number 2, which is actually maybe even more important because it's termination point of a wave 4 of 1 over degree. So if we go to the higher time frame, we are now in this red wave 4 bounce, and here was a black wave 4. So I'm looking for this resistance to be retested and then reversal to the downside. So overall, this current high does not impact my wave count. I still see an ABC rally and will expect to see a drop.
And correct me, sorry,
Yes?
sorry, I didn't want to interrupt. Correct me if I'm wrong, but this is a situation I was trying to persuade people for a long period of time, and I think this is exactly what you see in the cable as well, that all that choppy and prolonged move that we were having higher in the USD CAD was not an impulsive move, because it simply had the usual characteristics of a correction despite being, as I said, prolonged and taking a lot of time to evolve. And that's what you're seeing here, I'm guessing, as well, which is overlapping choppy price action that does move higher on one hand, but on the other hand, it does so in a fashion that is clearly not impulsive, right, Gregor?
Yes, because we have a lot of overlaps, and
Exactly.
as I said, on dollar CAD, if we make just a quick sample of that, here on dollar CAD, it was when through the year weekly chart. So here we also had a nice bounce from 2016 my lows, and it was also very slow, very choppy and overlapping recovery. And back then I was saying all the time that sooner or later dollar CAD will break sharply to the downside. So actually, as if a rally correction is becoming very complex, the fall or the following move can be even sharper. Okay,
Yes.
so it's not a surprise to see a very strong decline in 5 waves here, clearly in impulsive fashion on dollar CAD. So something similar is what we could see on cable as well. We have very deep long recovery, but still in a corrective fashion, a lot of overlaps, ideally still an ending diagonal. So definitely I would watch out for this resistance number 2 here, which is 200 pips away. But of course, I would not attack shorts here immediately. Definitely wait an impulsive sell-off before we may look for any trade setups. Actually, I was talking here in an impulsive decline, firstly, obviously in wave B, and I said that I will look for potential shorts, but I haven't. I didn't short it because I didn't get a confirming price action to confirm my bias action.
Yeah,
yes,
you didn't get a free wave up.
Yes, we saw I saw a 3 waves up, but didn't saw confirmation that this 3 waves up is finished. Okay, so that was probably key to avoid this trade, because I was enough patient not to take a trade. Which
yep, and patience is A to Z.
Yes, of course.
Gregor,
Yes,
I think Dale's guest is here. Is your guest David, Dale?
Yes, yeah, David Modell
Okay.
is in the house.
Yes, but before we go to that, Gregor, one last thing, because I know it's extremely popular and people want to know about it. Let me make you the presenter again, because I think you gave it away. I think people want to know about gold. They've already been asking about it, and they want to see your count as well. What do you think in gold? It's, as you know, it's very popular. It has been very popular lately. It has exceeded expectations of people after breaking 1300. So if you want to briefly talk about that before Dale starts with David.
Actually, what I see on gold is probably just a 3 wave rally. I'm not sure if we'll get an extended 3rd wave up, but based on minimum expectations, I would be looking up to hit 1440, maybe 1470 levels here. And the reason is because I'm tracking wave, let's say wave C, and wave C should be made by 5 waves. So if we respect that, then obviously we can see much higher prices from here. But as we go into the year end,
regardless, you're looking higher still. Regardless, I mean, of what kind of move this is going to prove to be, right?
yes, of course, it can be a corrective move, just a three-wave bounce. It can be impulsive, but for now, I'm still looking higher, and I'm expecting a spike above this swing high from July of 2016, from a year back, actually. Okay, so I'm expecting to break above it, and then let's see what happens. But for now, clearly, I'm still bullish, and here on the 4-hour chart, I actually started to tracking wave counts on the line chart because I think there's much clearer wave structure to ignore any noise, any spikes. So this makes the count very clear, and it can be counted in impulsive fashion. So for now, it's still bullish, and we will see what happens by the end of the week, if these supports around area of a formal wave 4 will hold or no. If we'll see a sharp drop beneath 1300, then definitely I will have to adjust the wave count, but probably this will not have any major impact on this look, which suggests that we are continuing higher into that red wave C, as I said, above 2016 highs.
Okay, mate. Great. Perfect. I think everybody had a very nice view in, how you're seeing, some important tickers today. So Dale,
thank you, Grega. Thank you,
yeah,
Steve. Thank you, Blake.
We're going to go over questions tomorrow.
Thank you, Face, for great questions for Grega and Steve and everyone, and David. Welcome to the Face community experience. And I'm making you the presenter. Looking forward to hearing your voice and perhaps a screen share.
Share, all right. And can you hear me?
I can, David, loud and clear. You know, you
Wonderful.
have, you know what people used to say to me, David, that I have the perfect face for radio. You have the perfect voice for radio or TV. So
really?
Welcome to our community, buddy.
Thank you, sir. Mr. Dale Pinkert. Can you see my screen yet?
Yeah, we have Netflix up here. Before we get to the markets, David, right. I have a little advantage because you interviewed me and we had a little two-way conversation, and you were mentored by your father. You know, normally I ask people about their journey and who they learned from, who was their influence. So you were blessed to have a father for a trader. So tell us what it was like when your father was mentoring you and some of the most valuable lessons that you learned from him that helped you avoid certain landmines.
Sure, that's a great question. And yes, just to give a little background, I am David Modell. I am an avid stock trader and investor, as well as options. And I've been doing this for a long time, but not nearly as long as my father. My father is 83 years old. He's seen it all as far as the markets go.
Does he still trade?
He does, and he still mentors me, and I'm very fortunate that I had that foundation. Let me tell you, he taught me about patience, because when I was I'm in my 40s now, I'm 45, but you know, when I was a young trader in my late teens, early 20s, my father would tell me to be patient. He'd say, wait for a really good trade. And of course, as a young man, I didn't want to listen to him. I wanted to be independent, do things my way. And that didn't work out so well. I had that, what they call nowadays FOMO, F-O-M-O, fear of missing out. Yes. And so a stock would go up 8 or 10 days in a row, and I would buy up here because I saw other people making money day after day after day. I would buy here, and then you know what would happen right after I hit that buy button, right? It's as if the market makers were watching me, waiting for me to hit that buy button, and then it might go sideways a little bit, and then, well, there's an old saying, stairs up, elevator down in the stock market. And so As soon as it goes up slowly, and then zoom down so fast, and it would go down 8 or 10 days in a row, and then I would sell right here out of frustration. And as soon as I hit that sell button, it would start to turn around and go up, and then I'd be even more frustrated.
We're supposed to listen to our fathers, but sometimes we need a firmer taskmaster, and nothing like losing money to teach you a lesson. So I know that he also taught you not to be all in, all out. So you want to talk about scaling and how you other lessons that he taught you?
Sure.
Besides patience,
patience. Yeah, well, that was the biggest one. And, I mean, fortunately, back then I didn't have much money to lose, and so if I blew up my account back then, it wasn't the end of the world, even though it felt like it at the time. Of course, now if I blew up my account now, that would be pretty awful. But scaling and scaling out. I mean, as Bernard Baruch said many years ago, yes, I know I'm full of old quotes. Don't even try to buy at the exact bottom. Don't even try to sell at the exact top. It's not going to happen. And if that's your goal, then you're going to drive yourself crazy. Because let's say.
He also said, you never go broke taking profits.
You never go broke taking profits. That goes hand in hand with it. So you can scale in and scale.
Yeah.
Right. He's great. And you can scale in and scale out of your position. And so, you see Netflix go down, you see it hit that bottom Bollinger Band there, let's say. Notice how perfectly it bounced right off of it here, by the way. So it just shows the power of the bands here. And so it hits the bottom, and so, you buy in. You don't have to throw it all in there, okay? It worked out perfectly here. Let's say you didn't buy it at the exact bottom. Let's say, I don't know, it started going down, and, you started to buy into it because you like to buy in the red and sell in the green, okay? So it's red, and you put a little bit into it. It goes down more. You can buy a little bit more, and then you just wait. I mean, you only want to put so much into it, all right? Even though Netflix is a premier company, it's a great stock, still. My father taught me you don't have to throw it all in. When I was young, I wanted to throw it all in there, okay, and let it ride. Then I would see it go down more after I took my position, and I'd be frustrated. So you can put in a little bit.
All your ammo was gone on your initial entry.
Oh, yeah. It would go down a few candles, I would buy, and then it would go down more, and I really missed an opportunity. So instead, put in some, and then if it goes down more, put in some more. I do not recommend doing that more than 3 times, let's say. Let's say it goes down more, you put in a little more, and then just stop, okay? Because after that, you've got too big a position size, and now you're starting to get emotional about it. You're risking too much. And so maximum of 3 times, I would say. 3 is the magic number. And then after that, if it goes down more, just watch it go down. Okay, if you have a stop loss, use it, of course, but don't put in more after that point. And then you've reduced your cost basis compared to your first entry point, because now you put in more and then put in more at a lower price, all right? And so it doesn't have to go up nearly as much before you can at least break even and then start to profit. And then scaling out, let's say you get out here, okay, maybe right before an earnings report, because that's understandable. Holding through an earnings report as a swing trader, or even as a long-term guy or gal, is a bit risky. It's not for everybody. And my students.
Binary.
Yeah, it's binary. It's a binary event. Well said. And so, I coach people, and, my students ask, should I hold through earnings? And usually I say no. If you have any profit whatsoever, just take it. Just take it, because I'm not a gambler. I'm a trader. I'm an investor. Yes, in this case, Netflix went up, 10%, 8%. Great. Okay. It could also have gone down 8, 10, even 20%, and that has been known to happen, or more. So since I'm not a gambler, since I'm not interested in holding through binary events, if I can help it, then I would, I tell people, if they really don't know what to do, how about take half off the table right before a binary event, all right? That way, if you lose, if it goes down 20%, all right, well, you only lost 10% compared to other people. If it goes up 20%, then, hey, all right, you gained 10%, okay, if you took half off the table, not bad. That's still something to be happy about, all right? And if it goes sideways, all right, so you took half off the table, you didn't really gain or lose much if it goes sideways. But for most people, I say...
Go ahead, David. I'm sorry.
Yeah, no, I'm sorry. I'm going like a freight train here. I got so much to. I got to let it all out.
Okay.
So I've got, you know, again, this is my father's idea, and I want to give it to the world because, you know, he's not going to be around forever. I want to pass this on to everybody. So you know, if for most people, I don't even say take half off the table. I say take it all off. Take it all off, right? Take it all off the table before binary event if you have any decent profit at all. Now, if you're down a lot and you know, a 20% or 10% gain can really help you at that point, you need it. All right, okay, you know, but hopefully you have stop losses so that you get out before you get to the point where you're that desperate. Desperation is not a good emotion at all in stocks or options or anything or Forex. I know your audience is probably mainly you know, currency trading, but all these can be applied. You can use Bollinger Bands. You can scale in and out. All right. So, you know, when you get to a certain point, instead of being all in or all out, you can take some off the table. Let's say you start to get a nice profit. All right. You take half off, and then boom. Okay. You get a nice bump there. You can take more off.
That's a nice study in gaps, Netflix, because you had the initial gap at 155 in July. It gapped up, and then into earnings, you actually had a runaway gap. And then you had a pullback into the gap, which it's currently advancing out of. Really great gap study. I remember when we were first trying to put an interview together, David, and we were starting an hour later, and you said, no, you know, I can't do it. That would interrupt with the best time for me, that you make most of your money at the opening. So, you know, I'm curious what you do with market opens, that's such a critical time for you for your trading. So
sure.
Do you recall telling me that?
Yeah, I do. I'm getting older and I don't recall a lot, but I do recall that. Yes, yeah. And actually, I don't mind going over today. I have enough positions on that I'm good to go for today. But if I were hungry to take on more positions, which, by the way, is not a good attitude. You shouldn't be, I'm ready to take on more positions. Whatever comes my way, I'm going to do it. No, you got to wait for the right setup. And if there are no great setups, do nothing. But
hardest thing to do,
yeah. It's okay to do nothing if there are no screaming buys or screaming shorts. If there's nothing that's really compelling, do nothing. You know, that's man, there's nothing like holding some dry powder, some cash there. That first half hour of the day is when the greatest volume occurs during a trading day. Now, I know that in currency markets that may not apply as much, but for the 9:30 to 4 o'clock Eastern time traders and investors such as myself, which is what I mostly do. Yes, you can trade, pre-market after hours, but the volume is just not there. So you're looking for the big moves. If you're looking to scalp, if you're looking just to make a quick $100 or 200 or 500 bucks, that's really the time to do it, because that's when the runaway gaps happen. And I know this is a daily chart, but if we put on the 5-minute chart, 1-minute chart, or a tick chart, depending on your preference, that's where the action is. Also the end of the day, but it really is the first half hour when so much action occurs, because people have been waiting all morning or even all overnight, just waiting to get in there.
Oh, I can't wait for the market to open. I need the market to open. So do you really drill down to a 1-minute, 5-minute chart for that kind of trading activity?
Sure. Absolutely. Yeah, the 1-minute chart, really, or 2-minute chart, because if you're looking at that first half hour, if you use the 5-minute chart, then you only get 6 candles to work with, and you can, on a good platform, you can see the candles move. But still, if you get the 1-minute or at least 2-minute chart, then you can really trade it. You can see if it's hitting that bottom Bollinger Band, that kind of thing, or whether you're using Bollinger channels.
The Bollies are a very important part of your buy and sell zones.
Sure, and well, not as much as they used to be. I'll be honest with you. Like my dad, he doesn't use Bollinger Bands. He doesn't use Keltner channels. He doesn't use any indicators. He just kind of does what they said in Star Wars at the end of the first Star Wars movie, which is use the Force. Okay, so or maybe the fourth Star Wars.
He's a tape reader.
Yeah,
you know, I knew guys in my early years. You'd go into a brokerage office, David, and they'd have the tape of the NYSE running with trades and show size and the trade executed. And there were guys that didn't even need a chart. All they had to do was watch the tape, and they would get a feel for direction of the market.
Right. Now,
Is that what he does?
Yeah, well, I don't know if I would call him a tape reader. He'll look at the chart, but he'll take everything off. He'll just make it, and I'm on stockcharts.com, by the way. I like to use this because everybody can use it. If I use my broker's platform, then not everybody else can join in and do what I'm doing. So he'll take everything off. He'll just look at that, and he'll use the Force, just like in the Star Wars movie at the end when he stops looking at when Luke Skywalker stops looking at all the indicators, and he just does what he knows is right. All right, and so he tells me, he says, Dave, I don't need the Bollinger Bands or the Keltner channels to tell me when there's a dip. This is a dip, okay?
Right.
So, but he taught me to look for a short-term dip within an overall uptrend. You know, for him, if you could just take a ruler and draw a general trend line through it, which you can with Netflix, for example. Yes, I could take a ruler and put it through here through the general trend. All right, and so it tends to go up over time. All right, so that's the first criterion. You know, does this tend to go up over time? Does it tend to recover from dips? Well, let's see. Here's a dip, it recovered. Here's a dip, it recovered. Here's a dip, it recovered. Yes, it tends to recover from dips every single time. Okay, there's an overall uptrend. I can put a ruler to it, and it goes up from the left. Lower left corner to the upper right corner. Great. So we have an overall uptrend. Now, is there a short-term dip? Sure, and you could have bought every single one. And my dad would say, you know, I don't need Bollinger Bands to tell me there's a dip. It went down here, you buy. Okay. It went down here, you buy. It went down here, you buy. It went down here, you buy. All right. So he's just using the Force. But for beginners, for my beginning students, you know, they don't always know necessarily what an overall uptrend is. They don't always necessarily know what a dip is. How far should I go to call it a dip? And when should I take profits? Okay, they don't always know. And so I tell them, okay, go to the chart, put on, if you're a swing trader, go ahead and, well, first of all, put on the Bollinger Bands there. And also put on the simple moving average 50-day and the simple moving average 200-day.
Okay.
There we go. Update the chart. That's what we had on before. And so I tell them the red line is more important than the green line, meaning that the I actually got it reversed here. So I'm going to say, well, let's say the 200-day moving average is more important than the 50-day moving average, because the 200-day moving average tells you the long-term general trend.
Right.
I see it's upwards from left to right. That's good. Less important, but still good for confirmation, just to make you feel a little bit better about the trade and about the trend, I should say, is the 50-day moving average. A little bit less important, but good for confirmation. Hey, it's moving upwards. Great. Okay. And then you can, and this is a simplified way of doing it. I don't recommend being this simplistic about it, but if you're a total beginner and you're a student of mine and you really are just totally clueless as to when to buy, when to sell, okay, look, buy when it pierces the lower Bollinger Band, sell when it pierces the upper Bollinger Band. Again, it's not as simple as that, but it works reasonably well. It works more often than it doesn't. Look how perfectly it bounced off of the bottom bully band here. And yes, if you had sold here, you would have missed out on massive upside. But again, this earnings report could have, this binary event could have gone way down. So there's no way to know that. So you could have bought here,
okay,
sold here.
Let's turn the clock to the present.
Sure.
So here we are at 181.74 approximately.
Right.
What are you telling your students to do with Netflix in here?
Well, again, if there's no great setup, then do nothing, unless you want to short it. But with the overall trend, both on the long-term 200-day moving average and the medium-term 50-day moving average, both trending upwards, who the heck wants to short this thing? You know, you want to short something like dry ships, which tends to go down over time, okay? Or even spheres. Let's start with dry ships. Not that I necessarily recommend shorting penny stocks, but this is just a great example of something that tends to go down over time. I mean, look at that.
Yeah, don't they keep doing reverse splits on it too?
Yeah, yeah. And so if you're going to short anything, I mean, this is something that used to be hundreds or even thousands of dollars. I mean, look at the scale. It's even warped the scale a little bit. That's how much it's gone down. And now it's a penny stock, because anything under $5 is defined by FINRA and the SEC, at least in the United States, as being a penny stock. So this thing tends to go, yeah, you can short pretty much any bump here, all right, and any rip here.
Just like selling any pop and VIX derivatives.
Yeah, exactly. Yeah, they're on UVXY, which my buddy Seth Golden does. He and I were actually mentioned in the New York Times. They put a link to my YouTube channel, which was really cool. But he was featured, and but because he's been so successful, you know, shorting the rips in UVXY, that's his favorite one. He also does TVIX and VXX, but UVXY is leveraged, and so that gives it even more decay. All right, so you know, those are great examples. You could also do something like Sears, because you know, again, it tends to go down over time, not as drastically, but you can see, yeah, the green here in this case is the 200. It tends to go down over time. The 50 is less reliable. It's a little wobbly here, but you know, again, at least it's not going up. It's just kind of unpredictable here. But
could you kind of show us? Yeah. Can you kind of show us what you do with your 1 minute charts? Were there any, you know, the market's going to open in 9 minutes.
Yeah.
So
Yeah.
I'm kind of curious as to, you know, what your radar or what you're laser focused on coming into today's session.
Yep. Let's go to my favorite one that everybody can use. Again, I prefer my traders platform, but I like to give something that everybody can go on to. So here's tradingview.com. All right, and let's say you go to, I don't know, Apple, whatever, doesn't matter. It's as good as any. Let it load up here. And it's right at, yeah, blah, 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 blah. Okay, and we're gonna get rid of all the junk here. They put so much stuff here. I don't need all this. There we go. And let's see. They won't let me collapse this today. That's okay. All right, so we're on the 1 minute chart here, and let's see. Can I get rid of this stuff? There we go. That's a lot better. All right.
So we're looking at the 1 minute here now.
Yeah, and again, it's pre-market, so it's not going to be as powerful right now. It'll open in 7 minutes, but yeah. So,
are you sure that's a 1 minute chart?
Let me see.
I'm
sorry, it's a 1 minute chart. Yeah, I'm sorry. There we go. There's a 1 minute chart. So, yeah. So it's showing, you know, all the pre-market and yesterday's action, which I'm not as interested in right now. But you know, on the short term, I think a little bit differently. As you saw on the daily chart, thinking about swing trading, I would probably fade. I would probably fade the move. You know, if I saw something become oversold, if I saw something go down a lot, like you know, 5, 6, 7, 8 candles in a row, then and if it's a good company that tends to go up over time, I would fade that move. I would take a long position. Whereas with the very short term, I'm thinking the opposite. You know, if you're gonna fade a strong down move or a strong up move on the 1 minute chart, that's asking for trouble. All right, because things, yes, there is mean reversion over time. Okay, and that's for swing trading. But if you're going to try to fade moves and count on mean reversion on the 1 minute chart, that's asking for problems. So I'm more of a gap and go rather than a gap and fade kind of guy when it comes to the 1 minute chart. So if this
you'll buy a gap higher opening, see how much it gives you.
Exactly.
Okay.
You know, I'm not going to fight. I'm not going to fight the very short-term trend on that. And so, if this gaps up, which, you know, they would have to adjust the chart, obviously. But if this thing gapped up, maybe I can go to yesterday's price action. Let's see if it goes back that far. 1600. That would be. Let me see. I'd have to go way back. But anyway, you get the idea. Yeah, I'm not going to even try to do that. So again, if it gaps way up, you know, if anything, I'm going to take a long position if it's just shooting like a rocket. If it gaps way down, yeah, I'm not going to try to fight that. I'm not a big shorter, but if something is especially if it's on bad news, if there's a catalyst, you know, if it's poor earnings, I mean, there is the old post-earnings drift phenomenon. You know,
Yeah.
if something gaps down badly on earnings, it's probably going to keep going down, at least in the short term, because people wake up and they see, oh my goodness, you know, Apple went down, you know, 15%. They're not going to be in a buying mood. Okay, you and I, as you know, savvy traders, we already knew half an hour earlier or an hour earlier that you know, at 8:30 Eastern Time AM, that it's going to gap down because we knew about the earnings miss, or if it happened the day before. But less savvy traders, a lot of the retails, they're going to not realize it until they wake up and they see it during the trading day. And so I'm not going to try to fight that move as people say, oh my goodness, sell, 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 get this out of my portfolio, which is silly to do, by the way, but they do it, and we can't fight that psychology. Also, throughout the day, analysts are going to downgrade it because analysts are a lagging indicator. And so if you're going to try to fight the downtrend, I wouldn't fade that move. I would go with it. So I'm more of a gap and go type of trader when it comes to that first half hour for the tick chart. But again, there has to be a catalyst. Earnings is not the only one. When Wells Fargo has bad news because they do something, you know, devious. When Equifax, yesterday for Equifax was a great example. That was a gap and go. Because it was a continuation of bad news. You know, they're going to have legal problems, most probably. People are piling on it. Can people trust Equifax anymore? People are angry at them because you know, there was a hack. People's leaked information. That's not a problem that goes away in a few minutes. And so it gapped down. And so you could have shorted that at any time during the day, almost, and it even went down more after hours. I wouldn't be surprised at all if it gaps down today, and you can short that. Now, again, use stop losses for something like this. It's not.
I don't think too many people want my identity. But anyway, you know, David, you know, you have a YouTube channel that I think could be a great resource for our community. Not just because I'm on there. I mean, you have videos where you have, you know, 10,000 views, 11,000 views.
Sure.
And so you answered a question for me. You answered a question about that. I was going to say, what's your business model off this? And so you do teach, you mentor people, and I didn't know that before today. So why don't you tell us what your business model is?
Sure. Well, people can email me at any time. Let's see, I got a whole thing about options here, but we're mostly talking about stocks today. Yeah, but I also I teach about stocks, I teach about options. They can email me at any time. My email address is David Modell, that's my name, first name, last name, at gmail.com. There we go. And you know, I teach one-on-one. I offer coaching on Skype and also by phone if Skype is not available to you. And it is highly affordable. People ask me, why do you charge so little? I say, well, you know, because I make enough money from trading and investing that I don't need to do this. It's more of a, I don't know, I really just enjoy doing it. You know, I've people send me emails and Skype messages almost every day saying, thank you, you saved me so much heartache and so much money. You know, because I spend more time telling people, no, don't do that, then okay, go ahead and do that, because people come to me, you know, on a daily basis through Skype, through phone sessions, you know, hey Dave, I got this hot stock tip. What do you think? Should I buy it? You know, my coworker, my family member, my best friend told me this is going to be hot. And yeah, that's one of my foundational principles is, you know, when your coworker or you're at the water cooler or your friend or your cousin who thinks he knows everything tells you about a hot stock tip, you nod your head and you smile and then you back away slowly. Okay. Yeah. But people come to me with these great ideas, or at least they think all the time, and I persuade them not to do it, and then I get them to think differently. I get them to think differently than 90% of the retail traders who fail at this, and that is the statistic you hear over and over. So I get them to think about, you know, fading moves if you're a longer term swing trader, because, you know, if it's a really great company, and I help them to decide what a really great company is. We look at fundamentals and not just charts, but then we do look at the charts, and we help them use some indicators in the beginning, and then maybe eventually they can learn to use the force. I've been doing that lately. I've been just you know, using that blank chart with no indicators lately, because I've actually gotten comfortable doing that. But if somebody is in the beginning stages, I can help them with that. All right. So if you want to find out what I'm all about, you know, you can type in David Modell into YouTube, and there I am. Okay. And yes, I have a face for radio as well. But I've got over 200 videos, and I've got to, you know, not only do I have videos where I teach indicators and things like that, but I've gotten to interview some of the greatest, including Mr. Dale Pinkert, some of the greatest traders and investors in the world. Guys like Dr. Du, Mark Faber, you know, Jeffrey Friedland, one of the premier marijuana stock guys. And even though I don't partake of that particular, you know, pleasure there with the marijuana,
you should have put a bong on that.
There we go. But out of respect for Mr. Friedland, I kept it classy. You know, for myself, I may not have any class. All right, Dale Pinkert, I'm not sure. Yeah, the jury's still out. But I'm just teasing you. But
yeah, you have to. Yeah, we should swap guest books. You know,
absolutely. I'll hand them off to you any day. These are guys like Gary Wagner, the gold guru. You know, Seth Golden. We talked about him, who shorts UVXY. And yes, I put attractive ladies on some of my indicator ones.
All right. Yeah, I wanted to ask you about that. I thought it might be the person that you're interviewing, but I have noticed that when you have models on your video, that the views skyrocket.
Yeah, 44,000 views, and we've got an attractive lady here standing next to the MACD. Is that a coincidence? I don't know. My most popular. I'm just saying. You know, putting it out there.
Sex sells. Yeah. Even in trading, sex sells, huh?
Right. My most popular videos, you know, almost 50,000 views for Lynette Zhang, but she brings her own audience. She has a loyal following. She's a wonderful lady. Cliff High, 37,000 views. Yeah, but again, he's an amazing guy. He brings his own audience with him. Bo Polney again. But you know, Jim Rogers was popular. But yeah, you know, sometimes I put an attractive lady because that seems to increase the view count. Bollinger Bands Made Simple. You know, there it is. I started doing that, and there's Charles Nenner. I don't know. There's an old saying: you got to get people.
When's Nenner saying the market's going to crash this year?
This quarter, actually, quarter 3. 2017. So he's still got time to be right. But you know, we are going into September now, so he's got a couple months to be right, I would say. Yeah, we'll see. You know, it was very generous to give me that interview, and I appreciate it so much. But yeah, you know, when it comes to the attractive ladies, you got to get people in the door. You know, and as long as the content inside when you click on it is good, which I'd like to think it is.
Look, they're all giving buy signals on that chart. They're pointing at flags.
That lady makes me want to buy things. I don't know what it is. You know,
I tell you, David, it was great. Yeah, it was. Your videos are great. I mean, you get people that I haven't been able to get. Understand? Look at that. And
see, you know, I'll buy anything from this lady. What can I tell you? I mean, whatever she tells me. You know, I'm all for it.
Her pants are diverging from her belly right there. The divergence. So, there's Kurt Spano. So you're a mentor. You're a Renaissance man. You're a mentor. You're a trader, and you're a broadcaster. So I'm so glad I reached out to you on Twitter. You know, I've pushed the interview that we did together. You almost have 1,000 views, and
hey, not bad, not bad.
Yeah. If you would have put a hot chick in front of my screen, maybe it'd be 19,000 views. But thank you so much for hanging out with us today and telling us about your dad. You were so blessed to have someone that loves you and cares about you to make sure you didn't do the wrong thing, although you had to go do the wrong thing. That just proves that, we all have to make our own mistakes. You try and help people. You could bring a horse to water, you can't get him to drink. So,
very true.
Great story on your journey, and I think you add a lot to the trading community with your videos and
thank you.
Sharing your skills with people that are lost in the forest, and you teach them to see the forest from the trees. So
absolutely.
Glad to call you my trading warrior brother, David. Thank you very much.
There you go. Awesome. Yeah, it's been a pleasure to be on here. And everybody check out ForexAnalytix.com. Analytics with an X at the end, because, man, Mr. Pinkert is putting out these videos for free, by the way, on YouTube and on Forex Analytics every day. You do this every day. I put out a video not every day. We're talking about, you've had some of the guys I've had. You've had Callum Thomas. You've had, like you said, Kirk Spano. These guys are at the top of their game.
Jack Schwager. Peter Bookvar.
Yeah. You know who you got to get? Have you had Chris Kimball yet? Oh, that guy.
I've tried. Tell him to come on.
I will.
I see his charts. He's very good. I'd love to interview Chris.
Oh my goodness. Yeah.
So some of these people like you more than me. I'm probably too aggressive.
I'm just more. I'm more annoyingly persistent. I've learned from sales that you got to get through 7 no's to get a yes. And so these guys who have agreed to let me interview them, it's not because I'm any good. It's because I've been such a pest that they
just to get you off their back, they'll do it.
Just to get me off their back, they say, "Fine, I'll give you 15 minutes," and then shut up already.
Well, David, I'm so glad that we've gotten to know each other. You're a great resource. Your video YouTube channel is elite. With the guests that you get, it's a library of knowledge for everyone, and you don't even need a library card.
Right.
So, thanks for your time today, buddy, and I hope that the dollars rain down on you and your students.
Absolutely. Thank you, sir. And, you're welcome back on my channel, and hopefully I'll be welcome back on your channel again at a later date.
It's a deal, buddy.
Thanks
a lot. All right,
lot.
Everyone, that's David Modell. He's a coach. He's a broadcaster. He's a trader. Hope everyone had a good turnaround Tuesday. That's a wrap for us here.
Yep.
I'll see everyone tomorrow. And remember, don't just count your pips, count your blessings. And David, I'm so glad you came through Irma okay, and you were able to do this interview with me today.
Thank you, sir.
Thank you, buddy.
Okay. All right.
All right.
Bye-bye.
See you, everybody. See you tomorrow for Wednesday. Adios.